Markets are moving fast, and who has time to read headlines all day? I know I don't. This is why I created Rushing, the first audio podcast that delivers simplified news for busy investors. This is made by a woman who trades and talks straight to the point. Hi, I'm Yuna, and in the next few minutes, you'll get what's moving the markets, why it matters, and where money's flowing. Everything is fast, smart, and reliable. Let's dive in.
First headline: U.S. Treasury yields drop despite hot economy. What does it mean? Treasury yields fell sharply even as stocks sit near record highs and inflation stays firm. Investors are betting the Fed is shifting its focus toward employment rather than pure inflation data. The curve steepened as traders priced in future rate cuts. Why magnify it? Falling yields amid strong equities signal confidence in a soft landing narrative. But if labor data weakens, that optimism can flip quickly. Lower yields support growth names and hurt dollar momentum. Possible affected sectors: treasuries across the curve, banks via net interest income, tech and growth equities, dollar pairs, real estate investment trusts. Second headline: gold plunges in historic sell-off. What does it mean? After an extraordinary run above $4,200, gold just logged its sharpest single-day drop in over a decade. Traders cite profit-taking, higher real yields, and algorithmic unwinds as drivers. Why magnify it? Gold has been the emotional hedge for this market. A collapse here could trigger repositioning across commodities, currencies, and inflation hedges. The question now is whether this is a dip or the peak. Possible affected sectors: gold and silver miners, commodity ETFs, jewelry retailers, metals refiners, currency pairs linked to risk sentiment. Third headline: China overtakes US as Germany's biggest trading partner. What does it mean? For the first 8 months of 2025, China reclaimed its title as Germany's top trading partner, surpassing the US amid tariffs and export barriers. The shift underscores Europe's deep economic ties with Asia despite geopolitical friction. Why magnify it? This realignment reshapes global supply chains and trade flows, potentially isolating US exporters while deepening China's leverage in European manufacturing and energy markets. Possible affected sectors: European industrials, German automakers, Asian shipping and logistics, commodity exporters, currency markets tied to euro and yuan. Fourth headline: tech earnings surprises shake valuations. What does it mean? Earnings from Netflix and Tesla painted a mixed picture. Strong user growth for streaming, but margin compression for EVs. Markets are recalibrating valuations as cost discipline becomes a key investor focus. Why magnify it? Tech is still the market's leadership cluster, but high expectations leave little room for error. A few weak guides can change factor momentum overnight. Possible affected sectors: mega-cap tech, streaming and entertainment, electric vehicles, chip suppliers, software, and AI infrastructure. Fifth headline: oil traders eye OPEC uncertainty. What does it mean? Crude prices wavered as conflicting signals emerged from OPEC officials. Fears of oversupply next year are tempered by geopolitical tensions that could squeeze production. Brent held in the upper 80 range. Why magnify it? Energy remains the inflation wildcard. Oversupply caps prices but supports transport and manufacturing margins. Renewed cuts or conflict could reignite inflation and move yields. Possible affected sectors: energy producers, refiners, transport and logistics, chemicals, inflation-linked bonds, airlines. That is your 3 to 5 minute brief. If this helped, the best free support you can offer is to subscribe, turn on notifications, and share it with others. Links to all socials and the written brief are in the description.